Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 4:15 in New York. It is Tuesday, 21st day of June 2016, and this is the daily report for gold and silver. Tremendous sell-off in the precious metals markets, gold leading the way down almost 2% on the day, 1.82, currently trading at 1266 and change. Low right around here, 1264, and the high 1294. Of course, we did have an open position that we recommended actually covering yesterday. All traders should be out of their long positions. Those that took profits last week got out at 1294. Those that took profits yesterday got out at 1290, roughly in the same area. Considering that the market is currently at 1266, I would say we have an excellent trade under our belt. On today's report, I want to take a look at not only today's action, how that relates to the Brexit or referendum vote coming up in Britain on Thursday, but also look at key areas in which we could look for potential support in the market, because I'm still in a bullish mode. However, we're obviously in a correction, but I believe we're getting closer to the tail end of the correction than we are to the beginning of it. So with that in mind, let's take a look at our first gold chart. Traders, if you recall from yesterday's show, we pretty much devoted the entire show to the rationale and reasons why I had suggested that all traders that were long gold exit their positions and pull profits. Market was trading roughly at 1290 to about 1293. We're going to mark ourselves out at 1290. Traders who got out last week when we suggested a alternate strategy got out a couple of dollars higher at around 1294, but on average, let's call it 1292. All traders are out in at 1245, out at 1290, and looking at the market in hindsight, that was certainly the most prudent and acceptable move to make, because all of that premium that we saw move into the market that was anticipating the potential for the UK to exit the European Union has really floated out both yesterday on Monday as well as today. Now, yesterday we had really the first signs of that, and that was these lower lows, these lows that we saw, and giving up most of the ground that we saw on Friday's close, this 1280 area right in here. And my sense was that we weren't going to see this market really pop higher unless that referendum came out in favor of Britain leaving the European Union. And up till that point, because the thought process was really going more and more towards the favor of staying in the European Union, that we would see over the next couple of days this market erode in price, meaning whatever was baked into the price of gold that was factoring in that uncertainty would come out prior to the vote. And that was one of the primary reasons that prompted me to get out of all of our long positions. Now, that being said, we're going to sit obviously on the sidelines through the vote. And of course, if the vote comes out in favor of them leaving, you can see this market genuinely gain that premium in a matter of minutes or hours, certainly days. We would see that market move back up. It's more difficult when you're looking at a piece of fundamental news that's about to come out to look at these technical factors and to make some sense of it. But if I were to do that, this is how I would look at the market. Obviously, we finished our correction, which was CC, and that completed a wave 2. We are currently in wave 3. When we look at that, I believe we've completed wave 1 of 3. We're going into some sort of an ABC correction or some type of correction. In terms of the termination of the correction, we've already broken through the 38% retracement level. So the logical point to look would be the 61% retracement level. That takes us to roughly 1245. And that would be the area, if the market should continue under pressure, that I would look for potential support to come into the market. The key right now is that if in fact the vote comes back that they are going to leave the European Union, you can look at this market in the following manner. It should really recapture all of this premium and possibly go back and test this 1320. If the referendum comes out where they're staying in the European Union, and this is what I'm going to find interesting, we've already taken out that premium with that in mind. So once that is actualized in that manner, we could see stabilizing prices. We could even see a price spike, but I don't think we're going to see a tremendous decline, and I could obviously be wrong, because we've already factored in the basic belief that they're not going to leave the European Union. Nonetheless, we're in for interesting days and fireworks over the next couple of days. We are going to sit sidelined. We have no open positions in gold, no open positions in silver, and that's just the way I like it. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another gold forecast update and review. Bye-bye.